Okay, so we're going to continue on what happens when I sell above par, because 99.9% of the times you are going to be selling above par. So I have a brand new account. Account is called paid in capital in excess of par. And so remember that I said that any amounts over the par value, that the preferred stock and the common stock accounts can only show the number of shares times the par value. Anything in excess of par will go into these new accounts. Let me show you an example. So here I sell preferred stock. So I issued 2,000 shares of $50 par preferred stock. So normally the 2,000 times the 50, which would be $100,000, would actually go into my account, but I actually sold it for cash at 55. So I really got 2,000 times $55, which is cash of 110,000. But I can only post the 2,000 shares times the par value into the preferred stock account. Everything else, or the excess, goes here. The $5 per share difference goes into here. So I got 110,000, but I can only put 100,000 here. The other 10,000 has to go in here. Okay? So anything over par will go into what we call the paid in capital in excess of par preferred stock. If this said common stock, this would say common stock. So I'll have a separate one for each type of stock. Now, sometimes I might actually issue stock in exchange for other things like land or building. Okay, so we have to be careful, and we have to record them at fair market value. If I can't do this, then the value of the stock is actually. So let me show you an example of this. I acquire land with a fair market value that cannot be determined. In exchange, the corporation issued 10,000 shares of its $10 par common stock. So the fair market value of the stock is $12. What that means is my par value is $10, but currently what my stock is selling for is $12. So market price is what is it selling for on that day. So here's my journal entry. So I actually get land valued at $120,000. My common stock will be credited for 100,000, which will basically be 10,000 shares times the $10 par. Remember, number of shares times par only goes there. And the excess, which is $2 difference, goes into here times the 10,000 shares. Okay, so this is if I'm not actually getting money, but I'm getting some sort of asset. Now, what happens if I don't have a par value? Okay, when I don't actually have a par value, then I actually put it, oh, by the way, before I go into this, let me back it up. This is just for when I get land, but if I have a no par stock that has a stated value, then the stated value is how much cash I'm going to get. But let's talk about what happens when I have a no par stock. Remember, I need a par value to assign a value. If I do not have par, then whatever I sell it for is what goes on the books. For example, I issued 10,000 shares of no par common stock at $40 a share. Then it's the $40 times the 10,000 that I get 400,000 cash, and my common stock is credited for the actual price I sold it at. Then on June 27th, I sell another 1,000 shares, but this time I sell at $36. So again, when it's no par, you take the number of shares times your selling price, and here's the journal entry. Well, here's my slide about the stated value one we talked about. Okay. So a stated value. So I'm going to show you the same example that we just had, but with a stated value. So here's what I have. On January 9th, a corporation issues 10,000 shares of a no par common stock, $40 a share. That's what I sell it at. So that's the money I get. I have a stated value of $25. It's kind of like the par value. So what happens is I got 40,000 times 10,000. So I got $400,000 cash. But in my common stock, it'll be 10,000 shares times the 25 will go into here. And then the excess goes into paid in capital in excess of stated value. So the difference between the $25 stated value and the $40 share is what's going to go into that. Okay? So just want you to understand this. Now this concludes this portion of how to actually journalize things.